This is Randy Finney with Right Side of the Chart, and today is Thursday, November 21st, 2019. I wanted to do a quick update on the markets and look at a couple things. I want to look at the semiconductors and maybe a few other things. So just some of the things I'm watching today, and we'll start out here sort of with a follow-up to the charts I'm watching this morning. So here's that. Here's the NQ 60-minute chart. You have the primary trend line off the October 3rd lows, breakdown, bend back testing, started to roll over, and as I pointed out this morning, we've been stair-stepping lower, but nothing really very impulsive. And remember, there's still just a strong bid beneath this market lately. You know, a little bit of a pullback here, really nothing to get excited about so far. And of course, we're heading into we'll soon be heading into the month of December, where seasonality favors the bullish trend. But then again, sometimes what I've learned over the years when you talk about Santa Claus rally, the small cap effect, whereas more often than not you have those, that lift into year end with people maxing out and contributing their 401ks and IRAs, funds doing window dressing. The flip side, usually when that doesn't pan out, instead of just being down or a flat market, usually have the much larger drops. So it's kind of so the odds might be favor the upside, but then if that doesn't pan out, the downside can be pretty significant. Either way, we'll let the charts be our guide. Right now, just taking it kind of one day at a time here, looking at these near-term levels. So here's that 60-minute chart I posted this morning, and just to zoom in, you have this wedge, a small little wedge pattern here, and the 82.66 level. We started to break down, but as we did yesterday, we're snapping back above. You can see as I'm doing the video right now, we're zooming a little tighter. That candlestick is now back above. Here's our 60-minute candle. The previous one we broke, closed back above it, and now we broke and we're trading back above the 82.66 support already, and right back on that trend line. So again, you need to see a solid close, and it would certainly help to take out those recent lows from yesterday. So that's how we look right now, and we'll just continue to monitor. And once again, I just want to caution that although we don't have any any high probability or solid sell signals, don't fall asleep at the wheel. Low volatility doesn't last forever, and nor do these upward grinds. And from that usually comes very sharp and swift correction. So if you're waiting for some green light to tell you if you are looking to short, or if you're long looking to get out of your positions, if you've been dip buying, they don't usually give you a green light. By the time you realize it's in play, you're probably already halfway down through the move. This markets, like I like to say, the stocks tend to fall faster than they rise. And again, you can look at any chart, go back and see that. So let's just get away from that for now. If there's any significant updates before the end of the video, I'll loop on that. Loop back to this, I should say. And I wanted to show you ES, S&P 500. Nothing's changed since yesterday. We have the same trend line. There we go. The same trend line off the October 3rd lows, and then I zoom in a little bit. And if you recall, yesterday there were two trend lines that came in together, intersecting uptrend lines that came in as support, and those certainly contained the pullback yesterday. You have this trend line right here, and you have this trend line right here, and you can see how well prices continue to act on those support levels. So those, it's pretty simple. Once again, it's now that we're looking at so far today's lows. If we took those out impulsively, you'll then take out, as I just showed you on NQ, you'll take out that little minor uptrend line. You still have 8,200 below, and if you take out, we moved much below today's lows. That's right here, the bottom of that candlestick. You're going to take out these two trend lines, and there's your first pretty decent support, about 30.76. I'd expect a reaction. Then maybe that contains any pullback, and we continue higher. That I can't tell you, but we would certainly watch it. Remember, support once broken becomes resistance. So although there's almost an infinite number of potential scenarios, what you want to look for, okay, do you break that? Then do you break 30.76 with conviction? If so, that opens the door to the next move down. But at the same time, you want to make sure if ES were to break 30.76, what's NQ doing? Is it at the 8,200 support or just above it? Because if it goes to 8,200 and holds that, you might get a whipsaw signal there if ES breaks below there. So again, a lot of variables. But so there's one potential scenario. Let's say we do break and we hit 30.76, we bounce. Then you might look for a short entry on a back test there. Yes, or wait till it fails. there's a lot of possibilities. I'm just showing you the levels, and as always, I'll update as things progress. I always say the charts are dynamic, and so is my analysis. So we'll take it one day at a time. But as of now, let me just keep it simple and then get away from the equity markets and look at. I want to look at the semis real quick here. Those are the levels that need to go right now, near term, and it's still to me a stair-stepping thing where you break this, and then at this point in 8200 on NQ, that's where I think the selling will begin to accelerate. We've seen some of the sharpest drops in recent weeks, just in the last couple of days, but they're still relatively small. Again, nothing to get so excited about. We had about a 1.25% drop in intraday and QQQ and NQ yesterday, but they snapped back and recovered a good part of that. So let's move on to I'll show you the because I know I cover futures a lot. There's more for me to see in the chart since they're trading virtually around the clock. There's more reaction points to see support levels, resistance levels, trend lines that might not appear on the QQQ chart, which is showing you the regular session trades from 9:30 to 4 p.m. So, but for those of you QQQ traders, again, let's just focus here on this daily chart and say if we get those sell signals, then you're headed probably down back here to at least this 196-ish level, maybe a back test of this trend line here that was taken out. And on the 60-minute chart, that's what it looks like there. So similar thing, you have that little triangle or minor uptrend line. It's not nearly as well defined on QQQ, but let's draw it like that, and you can see the support levels. But I think 199.80 is a little bit more significant than this 263 level on QQQ. So those are the levels to watch, and unless they go, the trend remains bullish. And there's what it looks like on SPY. 309.60 is the level I've had here for a few days, and that's so far. You can see again, this is the point. Know what time frame. Pay attention to the time frame you're on. This is 60-minute time frame. You had a few 60-minute intra candle or intra period breaks, but each time we managed to close back above it. So far, SPY is working its way up, holding support, and you really need to see a little bit more to kind of give you some conviction that we may go down and hit these this 302.54 price target. Again, I'll share my thoughts. I think we will soon, but like I said, I thought we'd do it here too, and we haven't. We kept walking up, so we haven't broken those support levels. Let's watch that. Now let's get on to something that might have some more. I think we'll almost certainly have more bang for your buck if and when we get these sell signals. And again, I'm focused right now. I'm highlighting some near-term pullback, 3-4% pullback targets on the indexes, but very, very much open for a lot more should those levels go. Should I see some fairly convincing things in the charts, price action, everything else, and which might open the door for a much larger move. But I'm going to start out here with the SOXX. There are 3 different semiconductor ETFs: XSD, SMH, and SOXX. I focus on SOXX because that also is the same index, unlike the others. They don't track the same index that SOXX, the 3-time bearish. I know that's a crowd favorite there for trading the semis, or SOXL, 3-time bullish, and they both track the PhilX SOXX semiconductor index, all 3 of them. So, but you have decay in the leveraged one. So I'm going to always focus on this chart, and you can see right now we have negative divergence here on the 60-minute time frame. That's where I'm starting out here. Clean negative divergence. We had divergence there. What happened? We overshot it little, but then the correction set in. Sometimes you have what I call a wedge overshoot. We had a wedge working up at this point, overshot it a bit and came back in, and then the correction set in. Positive divergence there was a catalyst for this rally. So you have the negative divergence. Here's a trend line, as well as I need to add some price support. So really, just like the markets, just need a little nudge. I feel like just I'm holding my hands out. I should probably put a video camera up here. I don't have one on my computer. Recording audio. I'm kind of just giving that little push, like somebody, the kid one kid's sitting on the edge of the pool, his friend comes up behind him and pushes him in, that kind of thing. And that boom, I think, would get this going, because we're on intersecting support levels, the uptrend line, as well as that 229.68, pretty decent level. And I think that would bring us back, as I said yesterday, I believe, to at least that 221 slash uptrend line right here, and possibly more. Now let's look at the daily chart. We'll go through a few stocks, and I think I'll probably just wrap the video up here, keep it, I'm not going to do an in-depth analysis of SOXX of all the components. I just want to show you what I'm seeing. All right, so this is a daily chart of SOXX. And we've been diverging since this point right here. In fact, we almost had a divergent high. Yeah, it was about an equal high, and you can see it's just wash, rinse, repeat stuff. A lot of people, mistake divergences for sell signals, but they are, I would say, close to 90% of the time, at least 80% of the time, that you have clean divergences with other things lining up, and then you get that sell signal, you're going to have a decent correction or trend reversal. So there's 1, 2, 3, and this divergence has just been building all along. You can see, we had divergences at each of those points. That was our first divergent high here, and again, this one was almost very call that near divergence, so slightly higher, almost an equal high there on the PPO. Next divergence. And then right now, this current most recent divergence, which is now confirmed, what I like to say, you won't find that in the textbook. It's just how I, something that I like to incorporate in my trading. Yeah, technically you have negative divergence when the indicators are making lower highs versus prices making higher highs. But I like to see that bearish crossover in the PPO, because that effectively puts in a lower peak versus just, the trend indicator moving up and still being below the previous high, because it's a trend indicator, a momentum indicator, and if it continues up, it's just going to burn through the divergences. So once that turns down, as you can see, it's pretty, just like the QQQ chart and SPY I showed you in recent videos with these bearish PPO crossovers, it's pretty darn reliable when you have clean separation, meaning the lines have been separated. You're in an uptrend, you get to a high level here, and then you have what I call a clean crossover. See, no false whipsaws there. I'm just pointing them out here. And there, let's just go back to these four previous ones, and look what happened afterwards. Well, that was actually the crossover came right there. So yeah, right around the top. And that's it, guys. There's no guarantees, but you put the probability, the odds in your favor, and you say, look, this is usually what happens after you get a clean high level. What I say high level, up here, high level bearish PPO crossover, and it confirms the divergence. That should, I would think, at minimum, just like this minimum, that small correction there, at minimum take us down to the 220 level and this uptrend line. And as I covered recently, this is a big, old, beautiful, in my opinion. I'm sorry, I love charts, and it's like artwork to me. And this is a beautiful bearish rising wedge, because you have a nice clean uptrend line right here off that low back here in December. Actually more clean than a lot of the indexes. You have numerous distinct reactions, apart, and there you have the divergence up top, confirming the bearish nature of that wedge. So, I could see it come down here. That's a very, very good, important support level. And I can just say this: if we pull back there, that's where the bulls should be buying. If you believe the semis, and if they are going a lot higher, that's where the buyers, quote unquote, should step in. You have beautiful, super well defined, a blind man can see that support right there. You have the 220 price support. It was a very significant level. This triple top high right here, and then the semis finally broke out, back tested, and they've rallied. So maybe they come in for another back test, and if they do, they have that intersecting support again where bulls should step in. And if they don't, which is whether you get a bounce or not, I think this wedge eventually breaks sooner than later. It looks fully mature. That would be very bearish, because it's a support break, it's a failed breakout, aka bull trap. A lot going on there. How far might the semis drop? I'm sure you probably have that question. Well, you know what you do there is you take the widest part of a wedge. Let me give this one more drawing here. Let me use a different board. Here's your divergence line from starting back here. So really, this is your wedge right here, and there's that uptrend line off the lows right here. Why does that keep popping up? I don't know what's going on, guys. I'm not looking at my keyboard. I need to hit shift to get that trend line up, and I was hitting, I think, the Windows key. It's right next to it. Okay, there it is. So there's your uptrend line right there, the wedge. And you would take, to measure that out, you just take the widest part of a wedge. And so I'll do that here. Widest part of the wedge from top to bottom. And you add that to where the wedge breaks down. You could put it at the top, but I prefer usually from where the wedge breaks down. That's what I like to do. I find that's where most wedges will play out to. You know, if it's a bull trend, we're going to new highs, and that would be let's just say minimum target there, and that's right around that 191.71. It's a pretty solid support level. So that would be a minimum target. From where we are today, how much downside is that? About 16, almost 17%. If we get down here to that lower target, that's about 28%. Yes, you get 3 times that in the leverage ETFs, but it cuts both ways. You really have to adjust your position size accordingly. All right, before we wrap this up, let me just look at a few of the semis, because that's always something I like to do. If I see a sector that appears to be setting up bullish or bearish, I want to confirm that with the top components, because as I like to say, an index or a sector is simply the sum of its parts. So in SOXX, what I've done is I've loaded the list of the components on a different monitor. I'm going to click through these in order of market cap. I'm not going to go through them all. This is Intel, the 800-pound gorilla, largest semiconductor stock in the world by market cap, 260 billion, which dwarfs the second largest Taiwan semi down at about 186 billion. So this is a big one to watch. You can see nice bullish, inverse head and shoulders pattern back here. There was other things going on. There was a head and shoulders pattern. That one played out. Technicals play out well on this. This is what I'm, big wedge, divergent high, falling wedge, divergent low, breakout back test. So these are all, you can just study those. All these charts, most of these setups have been posted in the past on Intel, but here's what I see now. Almost divergence. It kind of popped it just barely, but we had the bearish crossover. There's your divergence. Here's your divergence line. And so the bigger picture, if you strip everything away on Intel and you want to just point out what I think are the most salient points, I mean, there is a lot in the chart, and I think they all have their place, is you had, pretty much a triple top here. You had this other, or you have a potential triple top. Now it could break out of that, but there's your previous reaction low, and you can see every time Intel's gotten up to here, you can see what's happened after it has. And so there's one thing to note. The other thing to note is I go through all these semis. I may not point it out. Here's back to the daily chart. Pay attention to where the RSI is. You'll see the RSI in overbought territory, and you can go back and do this yourself. Every time you get overbought, I mean, you can. Again, I'm not going to do each and every one. Just look what happened to prices when you're overbought. So at the very least, it reiterates what I've been saying lately. The risk reward to me is just not attractive on the long side. People can't understand why I'm not long. The indexes right now. The index is the same story. I think, and so far it's held true. I've been saying this for weeks. The upside is minimal. I mean, we have individual stocks that have done 20, 30, 50% or more in just days or weeks lately. And the S&P 500, although yes, the market won't go down since it broke out the new highs above that previous high from back in, what was that, September, the previous all-time high from early September. We're up a whopping 2.25%. I can get that on a money market account right now at my bank. But again, it's in taking a big amount of risk. I think if suddenly these charts start to play out, we get some bad headline risk. But again, that's I've already talked about that. Just there's other fish to fry. Not being long is not analogous with being short. I still have some swing positions short from a while back. They're underwater, but they're such small percentage of my overall account that I'm willing to hold on to those right now, because again, there's just I don't see a lot of upside risk. If the market goes up much more, it's going to burn through these divergences, and it could open the door for maybe a blow off top in December. I'm very much open to that, and if I start to see signs of that, I'll close that out. I'm talking QID, which is a 2 times short on the Qs. But this one I'm interested in, and this one I'll tell you, I'm not putting its official trade yet. yesterday I started scaling into a short on the semis, and I plan to add to that because I think, again, for what I'm showing you here, all the reasons. I went over Intel. Let me show you Taiwan Semi and move on real quick and wrap this video up. Okay, see all these circles over here? They show you all the overbought conditions, and I haven't left any out, I don't believe. And so there it is. This is, sometimes you stay overbought for a while and you have the divergence. Again, I encourage you to replicate these charts and measure. It may not look like much, but that is a big drop. That's probably double digits, and that's the smallest one alone. And again, you can go through this and see it's just, there's maybe that's the smallest one, but I'm sure that's a decent pullback from about 42 down to about below 40. So that's a good drop there. That's going to be better than 5%. There's the next one. There's the next one. Again, I'm queuing off these oversold readings. There's the next one. Why would you expect this time to be any different? It is possible. I have seen it. Like I said, overbought sometimes stays overbought for an extended period of time or becomes more overbought. So that is very possible, but it's usually when it does that, the upside from that point is very limited. You might make another marginal new high, might take a few weeks to do so, but then you're probably heading back down. And Taiwan Semi, you can see, if I keep drawing those arrows about, there was a big breakout here. 1, 2, 3, all these other highs. I think we'd come back down to that level there. Let me look at a few more and we'll wrap it up. NVIDIA at resistance, there's a trend line, and these are things, again, overbought is not a sell signal. You want to short, I like to short in one of two ways, either oversold bounce into resistance if I think that resistance level will produce a reaction or reversal, and or a break of support. This one you have a pretty clean trend line. Let me come a little tighter here so you can see it. There's your trend line in NVIDIA right there. So you go short a half a position here if you like that one. Not one of my favorites, but I think it goes down, and then of course on a break of the trend line there as well. AVGO, let me make sure I have these. Yeah, I do have them sorted by market cap. But let me go over some of the other ones here that stand out. Okay, so here's what tends to happen, and what you want to watch for is pull a watch list on the sector. If you use TC2000 or I think even freestockcharts.com, which is from the same company, they don't you don't have to have a membership or a subscription. They'll give you the sector holdings. If you just click, you go to SOXX and or whatever sector ETF, and you click right here and it'll open up. See, there's all your components, and I like to just add a condition volume. I put in a condition there. I sort by a market capitalization. I like to put the big ones up top, and of course you can flag them and all that. So I'm going to close that list. I'm already working off it on another page, but that's what I wanted to show you. For example, some of these are starting to break down already, and this is a case where it may take time. We've been diverging. We had negative divergence here. We had it here. We had it here. And so you might say, oh, okay, well, divergences, they just don't work. Well, often they do. And when they do, usually the more overbought and the longer the divergence gets, the bigger the drop. And look, with KLAC and all these semis, let me tell you something. There are periods of sideways trading and sloppy action, but when you have these strong uptrends or downtrends, when the trend changes, when the tide changes from going in to going out, it's usually pretty sharp and explosive moves. So this is, again, I say this often, why I love shorting stocks. Here's a breakdown right there. Boom, that candle broke down. From the point of the breakdown, if I hit that trend line, I'm gonna drag it, so I gotta go right here. Let's just say from that high right there to low in just a few weeks there, 21% drop. That is a sell signal or breakdown all day long. It's impulsive. It's well below the trend line. Even my BOD, benefit of the doubt trend line, divergent high, extended rally, and I don't think it's over. The only way it's over in a one and done, and we're going to snap back up and back test, is if the majority of the other stocks don't break down soon as well. Birds of a feather flock together. Is it possible that KLAC continues lower with the rest of the semis continue higher? It is possible, and sometimes I do see that, but usually you're going to see, you have a much better chance of hitting that target I just gave you. That would be right now, just eyeballing this chart, a preferred swing target. There's some other support levels, like where we're at right now is a support level. That's probably, maybe hold up today if the semis hold up. There's some support right there. But I just wanted to say that, I think there's another, at least minimum, 11% downside. And so these are the things you watch. Get a watch list, keep an eye on these guys. The chip equipment makers, that's what KLAC is. These are, if the semiconductor stocks are the canary in the coal mine to the tech sector, which they are. A lot of people have been doing this a long time. Well, watch the semis. When you start seeing weakness in the semis, that usually precedes weakness in the overall tech sector. And so to that, if the semis are the canary in the coal mine to the tech sector, the chip equipment makers such as KLAC, Tencor, Applied Materials, they are the canary in the coal mine to the chip sector. And here's AMAT today, taken on the chin, down 3.5%, following a divergent high. You got it, same old wash, rinse, repeat stuff. There's our last divergent high. There's a divergent low. If you're new to the site, I don't only sniff out divergences and look for short setups. I look for long setups as well. It's whatever the charts are telling me. This one right now, coming off a divergent high, we're still above trend line support. And so you need to break that trend line, and it has intersecting resistance or support right there about 52.71. So you break that. Where it's going, that's not the point of this video. I haven't really gone through all these charts, but I'd like to do that soon. I'd like to do a more detailed analysis and or get some individual trade setups out for you guys, whether they're official or unofficial now. But I'll tell you, if you want to keep it simple, you don't have a lot of time and or capital, meaning you work a full or part-time job, or you just don't want to be in the front of the computer all day to manage a portfolio of, let's say, a half dozen or more individual semis, you can go with the ETF. ETFs, pros and cons. The advantages, you're diversified. So if you have one stock that has a big move against your position, it's not going to kill you. You have diversity, safety in numbers, but what it does also, it dilutes your returns. Like I said, I can go through the list, which I plan to do. There's about 31 individual stocks in SOXX, or 30, according to my watch list, 30 or 31. I don't know if SOXX is in that list. And I'll go through there and I'll pick out my top half dozen or so, and historically I'm able to look at the most bearish stocks within a bearish sector and then go with those and outperform. If this semis drop, if this wedge breaks and we hit that, what was I on the weekly chart before, we drop down here to 192.30, 16% drop, I think there's a good chance, the top 5 or 6 most bearish semiconductor stocks will probably drop 20 to 30% or so. So that's it. Let's wrap it up here, and then again, I will take some time to look at these charts, sniff out, and share my favorites with you, whether they're official or unofficial. And again, a little more work to be done right now because the market's resilient. Like I've said for a little while in the market, if you want to take a shot at it, no problem with a starter position. I just wouldn't go too heavy right now. There's just been a strong bid, and nor would I short SOXX until and unless it breaks. It'd be against all technical analysis and trading rules to short now. You either buy a stock on a pullback to support, and you have dual intersecting support levels here. So you either go long here, and there's a good chance to get another bounce, or wait for a pretty clear breakdown below. That's where you want it. That's where an objective short would come. If we don't break down now, I'd rather short on a bounce in anticipation. Sometimes I'll short up towards the top of a wedge when I'm pretty confident that that wedge is going to go on a breakout, and you have a much more favorable price. Imagine one more pop up here, and should it play out, and then you go on to breakout, well, you got about a 4% plus ride down, maybe 5-6% depending on where we go. If we went up there and the charts were still confirming, then you have a much more favorable entry price. All right, we're going to wrap it up here, and like I said, I'll follow up if I see anything interesting. The broad markets are kind of back at where they were when I started this video. The NQ is holding that level. ES is still above those dual support lines. So nothing right now, but by the time I get it out to you, that could all change. So just be patient and let this market come to us. Let's not force anything right now. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.